following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Tom Schneider, CMT with NinjaTrader, and today we have a new guest, new to us, new to the NinjaTrader live system, and it's a trader that we've been fortunate to get to talk to for the last couple of weeks, and has a great following on YouTube, and very happy to welcome Tanya Trades to NinjaTrader Live. How you doing, Tanya?
I'm doing great. How are you doing today?
Doing fine. Yeah, I was off yesterday. I had an extended weekend traveling, so happy to come back and talk with you.
Awesome.
Yeah, so Tanya, I've watched some of your segments on YouTube. They are competing with ours a little bit, so I can't watch them live. I watch them on a replay, which is great. Great thing about YouTube, you can do that. And just really enjoy watching how you look at the markets, and you're not shy, right? You're not shy about showing what you're doing in trading. Can you give a little bit of a background how you got into trading for people who
Right.
might not know who you are?
Okay, sure. So I started trading in around June 2020, I would say. I had graduated college in, June 2020, May 2020. I have a degree in biomedical engineering. And well, at the time, there's the lockdown happening in New York City. So the industry in which I wanted to go into, which was clinical research, they were really just there were no available jobs, right? For it was essential personnel only. So I was pretty much working odd jobs like personal assistant, walking dogs, things like that, too, while also learning how to trade. In the meantime, my inspiration was a Humble Trader on YouTube because I found her on YouTube and she seemed to be killing the markets, and she really talked about how to manage risk and things like that. So I actually had started getting involved in stocks and options at first, and um, pretty much in the 2-year mark, I was trading mostly like indices options, and my friend told me to look into futures because there's just a lot easier to trade with less complications involving the Greeks and such like that. And then I got involved in futures about two years ago, and I had actually switched my analysis, the type of analysis that I did used to do was pretty much based on like volume profile, VWAP, EMAs, and such like that. But I wasn't really finding too much success with that, right? I was still break-even trader, I would say at best. Very much boom and bust because I was not managing risk correctly.
Hmm.
And what had happened was one of my friends in a small little Discord that I met, I was shorting like a pattern, like basically like a double top and in the futures market, and I had gone stopped out. And he entered after me, after another break in structure and retracement, and then it went to the target, which I had already planned out while I got stopped out for break even. And he told me that he was looking into a different kind of way to analyze the markets called ICT concepts. So that's what basically introduced me to that by word of mouth. And then I found um, my mentor, ICT Concepts, on YouTube. And it's been a wild ride so far, I would say. Um, but honestly, I'm enjoying it. Like I've started, then I switched into trading futures with prop firms. And yeah, I started on YouTube maybe like in October, really. And then I started live streaming to sort of add like a bit of accountability to my trading because I was taking these too many trades, low probability trades that were not really feasible for my strategy, right? It was not really even my strategy at all. And I was just thinking, okay, maybe if I have an audience, um, it would bring a sort of a layer of shame to it, right?
Right.
Like,
Yeah.
like,
Yeah.
hey, if you actually like long here and you're the top of the day and there's no retracement, like people are gonna roast you. Like you're gonna, and that has happened to an extent, honestly. Like because if you're exposed to elements, like I like to say, right, you're gonna get all sorts of people there and like sort of analyzing you under a microscope, right? But yeah, I really enjoy doing it, and I enjoy the community I've found really. I started really just sharing on Twitter, things like my notes, things like the trades I took, and that sort of built up from there. And then I decided to share more on YouTube.
So,
So
so
pretty
Tanya, just
incredible.
a couple things. I mean, there's a lot there to unpack, and I appreciate you sharing with us your um, history so far and how you got to where you are. Um,
Hmm.
the idea that obviously sharing with kind of a broad audience, you don't really have control over the audience, right? Maybe you have some, you can block people, of course, but
Yeah,
doesn't sound like your style. It is humbling. It is something that is honest, right? So you're not cherry picking. You're not
yeah,
saying like this is look how great I am because I'm only showing you the great trades.
right.
Um, but curious about how the prop firms uh,
Hmm.
how they like that or don't like that before we get
Hmm.
into kind of the topic, which is a routine, because I think a routine definitely has evolved for you, as you
Hmm.
mentioned, with the different ways you look at the market.
Hmm.
But want to kind of take a more holistic approach at looking at that. But what do the prop firms say about you sharing your ideas, your trading live as it happens?
I don't think that they mind. I think they encourage it because it just gives them free advertising, I think.
Free exposure, right? Yeah.
And I do tell my audience, don't copy my trades, um, because essentially like it's not your risk is not my risk, and your risk appetite or your account size or um, everything is very dynamic. So, and especially like you should never really be copying someone else's exact trade, es- especially if it's not your strategy, right? Everyone, I think, should find their own model.
Right.
Even in the past, and I've said this to my audience, I've tried that. I've tried signal services and completely it didn't work for me. I
Right.
even so much so that there was one signal service from someone like a momentum day trader that traded stocks and options. Um Even his like dashboard would ping exactly when he would get into a trade. And I even back in the day, maybe like 3 years ago, I think 2021, I was just following that and I still lost money because I didn't know exactly how much he was like buying in terms of his whole portfolio and things like that. And managing trades is different. So, um, so, so I 100% believe that you need to put in your own work. My stream is more, I think a lot of people find value in just the fact that I maybe not so animated, I would say, on the screen. I'm a little bit more of a calming presence. People have told me that they appreciate that just to have in the background and describing price. And, if there's a large move in price, I'm not really too phased by it. Like it happens all the time.
Well,
Um,
Tanya, that's a good point because for you, I think you have a different experience than a lot of us who have been around a little bit longer, which is with your COVID experience. You were at school and you graduated during the lockdown year, and maybe you
mhm,
didn't really have that experience of working in an office
mhm.
before COVID, which a lot of us have, right?
Yeah.
And so you get used to this kind of, I won't say hum or patter or whatever you want to call it, but you're used to having people around if you've worked in an office, even if you weren't trading, right? If you weren't on a trading floor or When I say trading floor now, that means being on a floor at an institution or a hedge fund. But in the pits back before that, there was definitely a different volume level. But even in a regular office, you're used to other people talking, and
Hmm.
so now that everything seems to be so remote, it's good to have something on in the background that says,
Right.
you might hear some key words, you might ignore it. Just listening to somebody talk is good. And I think
Right.
you have a nice cadence. Like you said, you're not excitable, right? You're not getting people hyped up about this next trade, which I've seen on YouTube, and that gets old really quick.
Hmm.
So,
Right. You never want to put too much weight under any one trade that you're in. Like,
right.
you always have to think about it could definitely stop you out. You could definitely take a loss, and you have to accept the risk before getting in. Um, yeah, in an office, not so much. I definitely had like internships and long um sort of internships that like research laboratories and also in the emergency room of
Oh,
the
yeah.
hospital where I would do clinical research. So there was definitely a lot of people around. But you were just doing their own thing, but definitely very loud in the hospital emergency room in New York City. You get a lot of different characters that come in.
Sure.
Um, but I was mostly doing things for clinical reasons, such as like sickle cell anemia, meeting with those patients and things like that. But yeah, I would say training is lonely. A lot of people like to have something in the background, right? Like and it feels like you might be in the room with me.
Right.
Um, and I enjoy it as well. And I enjoy like after the trading session's over, reading some comments or maybe some questions I get, and it feels like you're part of something. It's not so lonely. It is very much not a team sport. It's very much you versus you. But at the same time, you could have people you engage with and you meet a bunch of different people. I'm very thankful for my community and everyone that I've met on Twitter so far and things like that. And I've even met some people in person, which has been fun.
Yeah, that's always a nice surprise, or a nice added bonus when you get to finally meet up with someone.
Hmm.
Um, Jim and I are very much remote. Mike Burke, we're remote, right? We're not in the Chicago office. The
Hmm.
production team is remote. So when we got to meet together at the Christmas party this past December, that was just, a great thing. Um, let's talk about routine for a moment.
Hmm.
Jim and I and Mike, we have our routines, and they're slightly different. We come from different backgrounds, and I've learned from Jim, I've learned from Mike, and I've adapted what I've, liked about their routines, and I hope they've taken some from mine. It's always adapting, it's always evolving.
Hmm.
Um, what are some of the things, and I'm going to come back to this because there's one thing in particular I like about your routine that we'll come back to. But if you can just kind of elaborate on maybe how you prep for the trading day, when do you trade?
Hmm.
When do you find, your routine is the trading for you is maybe you're at your best? And what do you think makes you a little bit different than what you've seen out there in terms of your routine?
Hmm. Okay.
It's a lot to
Well,
throw at you.
yeah, that's a lot of questions thrown into there. I would say like I don't for my trading routine, I definitely have like certain steps I do pretty much every day. First, like before even like getting to the charts, I do like to do a little brain exercise routine on this free website, brainhq.com.
Hmm.
And that's just sort of because you need like very fast reactions in the market, especially if you're trading on a small time frame, like the 1 minute, like I often do, or even the 30 second sometimes. Um, so that's just more like memory and focus games. You get like a free exercise every single day. It's fun. It's very difficult actually, but just like an athlete like warms up before a game, like you need to warm up before the trading session. And other things I like to do is maybe look at a trade um, I took the other day, right? Review something to sort of just be able to visualize how it's going to look on the chart today. Um, and then I look at the economic calendar. I always do this before the week even starts, but I always double check to see if there's any high impact red folder news coming out to be aware of, because at that time, that's the most injected volatility in the marketplace, right? So that's the most likely time that large moves are going to happen. And I like to capture larger type of moves. And so then from there, I take a look at the indices and what did they do during the London session, right? So if London already manipulated downwards and took out some liquidity, then maybe we'll go higher during New York session, right? Because there are different daily profiles I have in my mind about how the day will turn out, right? I always look at the daily candles and sort of like to visualize like what I believe, how might this day end, whether it's going to be a large range or a small range. Today, I was anticipating a smaller range day because there's no news ahead of Thursday.
Right.
And that sort of helped me just not overstay my welcome. I did try one small short. It went in profit for a bit, so I could have been a little bit quicker on that, but closed it for about like -5 or 6 points, and that's basically it. So today I defined the conditions as lower probability because the S&P already took a weekly high. So I have a whole list of things I look at. Whether or not we hit a major level before the indices even opened, then it's likely lower probability because we already hit and expanded towards that draw. So next, it's more likely that price will be in a holding pattern or consolidate. And that just makes harder price action, right? And another thing I look at is if London expanded towards the draw on liquidity. If the London session is already a large range, then it's more likely that like it'll be a smaller range during New York, or there's only a small amount of range to capture left that it might not even be like worth it to be part of the move in terms of like framing your risk.
How do you determine the range? Are you looking at average true range? Are you looking at yesterday's range combination?
I do look at average true range, and then I also measure out from where like how many points are left to a certain level that I'm looking at for a price to hit.
Sure.
So, you know, if NQ has already moved 100 150 points during London or 100 points during London, there's only like 20 or 30 points left until the buy side target I have is going to get hit.
Sure.
And there's not really any sort of protected low that I can put my stop under, then I'm not going to get involved into the trade.
Right.
Yeah. So I look at all those things pretty much. And I do like to, I have a little journal next to me, like a little notebook. So then, because honestly, like if you're trading, a lot of the times your ideas will change throughout the morning, but it is good to write down what your major plan is. Like, for example, hey, price is still bullish on the higher time frame, so if I take a short, I don't want to overstay my welcome. I just want to scalp it, like a small quick move to the first target I have.
Right.
Because once you're in the trade, a lot of the times you can forget or you get a little greedy. Things like that. And then the last thing I would say is I have an alarm on my phone every day that goes off at 10:15 a.m. Some of my audience appreciates it. Some of them say that they have PTSD from it. It's just a regular iPhone alarm. So, and it goes off at 10:15 because that's pretty much the middle of the trading session. And that just serves as a mental game reminder for me, to basically, you know, check yourself before you wreck yourself type of thing. Because at the middle of the trading session, it's either that number one, I took a win already. Number two, I took a loss already. Number three, I missed a trade, right? There's so many different scenarios, but to literally just come back and, like I said, put a disruption there so that if you are getting carried away in one way or the other in terms of overconfidence or fear of missing out, that could serve as something that will disrupt your mental to give you a reminder to reset.
That's what I wanted to point out too, was the 10-15 mental check. because we know that, like you said, if you're not getting the results you want, there is the concept of revenge trading,
Oh yeah.
and this might be kind of that stopper to say, hey, hold on a second, if you did take a loser, walk away, figure it
Mm-hmm.
out, write it down in your journal. Maybe reassess the trading day, right? And reassess
Mm-hmm.
that maybe this isn't the trading day you anticipated, and it might not be good to chase that loser, right? And try to get it back. Or if you're having winners, it's like, hey, maybe it is time to
Mm-hmm.
reassess your strategy again, right? And wherever you are in the trading day, I like that because it's um it's a set thing, right? It's a schedule. We like routine. We like
Mm-hmm.
something that we know, even if it's something made up, right? 10:15, well, there's no news usually coming out at
No, yeah.
10:15 that we know. So it's like Tanya's time, right? It's not
Yeah.
anything but your time, but you said this is what it is, and it
Yeah.
makes sense, right?
It's pretty much
Because
halfway between 9:30 and 11, and that's when I trade. So
oh, that
it's like
makes
halfway
sense.
through the session.
Right,
Yeah,
you're done
mhm.
with the opening range, right?
Yeah.
So institutions have come in, express their opinion, assuming there's no news at 10 and they don't come back in. Yeah, it's a good
Mhm.
time to kind of look, especially if you're, like you said, it's halfway through your trading range.
Yeah, exactly. And it could come, sometimes it's happened while I'm in a trade too.
Yeah.
And that just gives you a little reminder of like, okay, what is that the plan for this trade? Am I overstaying? Am I going to take out at the first profit, or I'm going to hold for a longer uh range on the higher time frame? And just makes you just reevaluate your plan, I would say. And that's the most important part because if I would say most of my losses as a trader and came from just taking trades that don't follow any sort of plan, that were taken on a whim after, like you said, revenge trading in lower probability conditions. So that's sort of how I've adapted my routine to help mitigate all those losses and help the bottom line, right?
So that's a great comment about where you might have fallen down in the past. How
Hmm.
often was that happening when you first started trading? You were trading stocks or options on
Hmm.
stocks,
Hmm.
options on indices, and then you
Hmm.
came out of the futures. But how often did that happen when you first started? Because I know a new trader, they're learning so much, right? And you've done that
Hmm.
recently, relatively recently, to compared to, let's say, 4 years later when you have experience and now you have a completely different, I'm sure, routine than you did 4 years ago.
Right. Oh yeah, 100%. I think like 4 years ago, I was just like going straight to the charts and just finding I had stock screeners, of course, but um 100%. I would just try to make the money back right away on that session, and like I had to be green, and I had to um literally just be green on that day, and I'd forget about the longer term outlook. 4 years in, you realize, okay, actually there's a trade for another day. Leave it. Like there's always another day, another like my mentor says, it's like a public transportation, another bus will come. Just have to wait for it.
That's
If you miss the bus, if you missed a trade, then it's fine too. Like they'll just wait for the next one. And there's been so many times, when I first started prop firm trading, I messed myself up there because I would press press hard for that in those low probability conditions. And oh, all of a sudden you blew up your account, and now the easy salad days, as we call them, come along, the easier days, the easy conditions. Um, and now I'm taking those trades on just a challenge account where it's just, simulated, and I'm not actually putting that into my bank account. And it really is about filtering and knowing what conditions you work best in.
Did you find coming over to futures with the ability to go long and short easier? Did that
Oh
help you a
yeah.
lot?
A lot easier. And I would say it helped a lot in terms of coming from options. You could actually feel bad about having a winning trade if you come back and see that contract ran another, 100%, and you can't really buy it back because it's inflated and now it's worth more than what you sold it for. The futures is a lot simpler because, you could always get back into a trade and every tick is always the same amount of value, and you're not missing out. pretty much. So
Right.
there's a smaller sense of urgency, I would say. But you do have to be, I would say, like more precise on your entries and things like that, just because um, it is very high leveraged.
Right. There is risk.
Hmm.
You don't want to extend your risk too much.
Hmm.
Question for you, Tanya. You mentioned we were talking before the show about NASDAQ. You trade NASDAQ. You
Hmm.
trade E-mini. Are there,
Hmm.
do you just focus specifically on equities, or have you looked
Yeah,
into other futures contracts?
I would say my prime focus is equities, and that's been um, successful for me. And I do think that becoming like a master of like one market is very helpful. Um, Maybe in the future I will be looking at other people have been telling me, encouraging me to take a look at gold and crude oil and in those like low probability condition days for the indices, sometimes crude is moving, and things like that instead of adjusting for those. But pretty much yeah, NASDAQ. I just know how they move and getting to know one asset class and just one ticker. You get to know it and how they move, and I think just makes you more comfortable as a trader. And there's less surprises and less emotions involved then.
And we're running up against time, and I do
Mhm.
have one more question. Do you feel more confident in your trading 4 years in?
I would say yes, but also to the point where sometimes I would say overconfidence comes as an issue when you are also with a live audience. Like you want to make sure not to really read the chat because a lot of times you can get stubborn and try to fade the chat and such like that. But it has been made me more confident in the way I look at the markets and
Mm.
my whole routine and getting involved and basically making my process structured in a way that I know, okay, even if I had a losing day, I did all the things right, and tomorrow's another day.
Awesome. Tanya, thank you so much for coming on. I do want people to know how they can find you. Where's the best place to find you?
Right. You can find me on YouTube, Tanya Trades. I pretty much live stream in the mornings. I don't want to steal your audience though. And
I don't think
Twitter,
you will.
Tanya Trades, and Instagram, Tanya Trades. It's just spelled like that. Don't fall for any imposters.
Exactly. And I do want to say that your YouTube videos are really fun is the wrong term. I enjoy watching them.
Hmm.
It's entertaining, but it's also educational, and it's just good to watch you trade and your thought process. And it's certainly different from what we've seen. So I encourage everybody to go to Tanya's YouTube channel and see how she approaches the trading day. I think you'll learn a lot. Want to thank you for coming on, and we'll do
Thank
this again in
you.
the future. I really appreciate it, Tanya.
Awesome. Thank you for having me.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.